I think Amazon might be the most mispriced mega cap heading into 2026. I don't think the market fully gets what Amazon Web Service, AI infrastructure, and the capex cycle could do to their cash flow over the next few years. In this video, I'll lay out the bull case, the bear case, as well as the exact upside and downside, and I think it's on the table from today's price. Thank you. Amazon makes money across three segments: the retail, AWS cloud services, and advertising. But for investors, the most important thing is where the profits actually come from. Retail is low margin, scale game, while AWS and ads are high margin businesses that drive the vast majority of earning power. Getting the profit mix right is essential to value Amazon properly. Thank you. AWS is still the number one cloud platform, with about a third of the global market, ahead of Microsoft Azure and Google Cloud. Even after the pandemic boom faded, AWS is still putting up roughly 30% operating margins. That kind of scale and profitability is why AWS is the cloud profit engine that makes Amazon look nothing like a retailer. Inside AWS, Amazon is pouring money into AI infrastructure, custom chips like Trainium and Inferentia, plus higher level of services like Bedrock. This could either strengthen AWS moat or spark an expensive arms race that pressures the margins. The way AWS plays AI from here will go a long way in deciding what Amazon looks like in the 2030s. Amazon is in a heavy capex cycle right now, pouring cash into data centers, AI chips, and its logistic network. That suppresses today's free cash flow and fuels the story that margins are under permanent pressure. But if this is a temporary build out that eases after 2025, it could flip into a harvest phase with more stronger cash generation. Today's free cash flow looks depressed, but that's largely a function of elevated investment rather than broken economics. If you fast forward to a more normalized capex environment around 2026, Amazon underlying cash generation should look very different. And when you separate out the low margin retail segment from the much higher margin AWS business, it's clear that the current headline numbers understate Amazon's true earning power. On the bear side, Amazon is locked in a brutal retail competition with Walmart and others, keeping pricing and margins under pressure. AI could narrow the AWS lead, while regulators push on the market powers and margins. If capex stays elevated and these risks begin to bite, today's multiple may already be too rich. In the bull case, AWS AI tools become a major new growth engine on top of its cloud dominance. High margin ads keep compounding, and retail finally shows operating leverage. High capex intensity falls as the build out matures. Amazon's free cash flow could possibly surprise for years. Amazon trades at a clear discount to Microsoft, Google, and Meta on both EV over EBIT and free cash flow yield on 2026 estimates. The market is effectively saying it doesn't fully trust Amazon's margin profile yet. But if AWS and ads keep compounding and free cash flow normalizes as capex comes down, that valuation gap has room to close. Here is the framework behind my numbers. I start with ranges for AWS growth, ad growth, and a more normalized capex run rate by 2026. From there, I build a free cash flow range for 2026 and apply a conservative multiple to get to a fair value band. On that basis, I see roughly 20% downside in a tougher scenario and around 60% upside if the bull case executes. How am I actually positioning? My verdict is accumulate. With a 2026 and beyond time horizon, I think the mix of AWS AI upside, a structurally higher margin, ads business, and latent operating leverage in retail creates an attractive payoff profile. Limited fundamental downside with meaningful re-rating potentials if Amazon simply executes reasonably well. If you found this structured breakdown useful, I've done similar deep dives on NVIDIA, Google, and Meta using same valuation framework with downside upside ranges. Watch us next to compare opportunity sets. And if you want ongoing updates on the AI and cloud cycles evolve, hit the subscribe and turn on notifications so you don't miss the next one. Thank you for watching.